Cédric, I leave to you to introduce this keynote titled Overaccumulating AI, Rationale, Faultlines, and Politics. Thanks, Cédric, for joining us.
Thanks, Matteo, for this very nice introduction. Thanks for the invitation for this conference and for the wonderful organization. Being here in Venice is a great pleasure. And thank you also, Giorgio, for the discussion. There is a lot to push on. I think your point on imperialism and the connection to technofederalism is perfectly strong, and I need to think more about that. Today I will focus not on this specific part of my work, but more narrowly on the current conjuncture and the discussion about the bubble concerning AI. And I will try to assess to what extent there is a bubble, what that means in this specific moment we are in. So I was hoping to come here with a proper theory of that. I'm not there yet, but I have some ideas that I think we can maybe share. So, of course, there is a bubble. I think that's very clear. This is from an index from the Financial Times concerning global information technology. And you see that since the release of ChatGPT in October 2022, there has been an almost threefold increase in the valorization of this technology sector, which is clearly out of touch of the general growth of the activity in that sector. And if you look more specifically at some companies, you also have this very clear increase in valuation that is spectacular. Look on the left, it's Anthropic, one of these leading startups from that activity. You have more than 30 times increase in terms of market capitalization. NVIDIA, which is also one of the key actors making a processor, it's more than almost four times increase in stock market valorization. And it's in a little bit more than in 1 year, because it's between December 31 and January 2023 and January 2026. So that's, yes, 2 years, but no more than that. And even Microsoft, which is, of course, a gigantic company for a long time now, it's 25% of increase in stock market valorization. So there is a boom around AI that is supported by a huge boom in terms of stock market valorization of the company related to that. So the first thing that we can say is we have something that we already know for a long time. It's the logic of financial speculation. A new idea is coming in, so there is something new, and a lot of debt is coming in, which is helping to support the increasing valorization of that. And at some point, there will be something like a crash, and of course, we will forget that market is subject to very frequent internal dynamics of errors leading to such crises. So this is a long story of financial euphoria. And that's really not something new. And this is from Jan Bruegel the Younger. That's an allegory of the tulip mania. Already in the 17th century, you had that episode of speculation surrounding tulips, and at that point, people were buying tulips bulbs instead of houses, and because they were speculating about that. So you have this kind of irrational moment of speculation. But I will say that AI is not tulips. And I think that's something that is important in the sense that it's having a material impact. It's something that is concrete. And that's something that is said by people on the ground, investors. Eman Taneja, that I will quote several times here, is a venture capitalist, and he explained that bubbles are goods. And of course it's a bubble, but bubbles are goods. Bubbles align capital and talent in a new trend, and that creates some carnage, there is some instability, but it also creates enduring new businesses, and that changes the world. And Jeff Bezos also said that just a couple of months ago. This is a bubble, of course, but this is a kind of industrial bubble as opposed to financial bubbles. So it's not the tulip mania, it's not 2008, it's another kind of bubble. And of course, it's difficult to decide what are good investment, bad investment, so a lot of errors are made, a lot of mistakes, which will provoke for sure some instability, but at the end of the day, AI is real, it's going to change every industry. And what you can see on the right is that indeed something is changing. There is a lot of buildup of data center capacities in the US, and that's increasing at a very impressive rate. So that's not only concerning that sector, but the US economy as a whole. One of the commentators of the Financial Times, Richard Sharma, explained this autumn that America is now one big bet on AI. And if you look at AI-related investment as percentage of GDP, indeed it's kind of very important. It's increasing very rapidly in the past year, from a little bit more than 4% to almost 5% right now of GDP. So that's something very, very big. And it's a big part of fixed capital formation in the US. So investment in AI is a driving force of US capitalism right now. And we can look at a little bit more in the detail of that. So it's very difficult to decide what is investment in AI. So it's kind of narrow conservative calculation on that. You have in blue information processes, equipment, and software. So that's mainly processors, that's mainly software linked to information processing in general. So that's in blue. And you see that here that we have the most of the increase. So basically here that's buying chips to deploy this kind of data center. In yellow, that's the proper construction of data center, so the build-up. So a big part of the AI boom is just building stuff. So you can see that also increasing significantly. And in red, that's building factories to build equipment for those data center, electronic equipment, so in particular chips factories, but other kinds. But that's not all. There is more in that. There is also electricity build-up capacity that is not concerned that because it's very difficult to distinguish what is related to AI, what is not. But you see that you have a real boom, fixed capital boom linked to AI in the US, and in a very short period of time. The increase is very rapid. It's 2 years, 2024, 2025, and it's really booming. So what can we say about that? My hypothesis is that everybody is agreed that it's a bubble, so it's overaccumulation of capital. So we have this capitalist necessary passion for surplus value producing technological change, and this is producing some forms of surplus capital, meaning too much capital vis-à-vis valorization opportunities to employ that capital. So I would like to show where there is too much of capital or where returns will not be done. So that's what we will try to explore. So as I said, it's not a model, not a complete explanation. It's a preliminary mapping of the problem. And of course, a strong limitation, it's US focused. It's not the whole story. So I'm perfectly aware of that, but that's where I'm looking at today. So what I will present first is the rationale, where we can see this passion for surplus value producing technological change, how it's taking place in the context of the AI bubble. Then I will look at some fault lines, so trying to map some vulnerabilities arising from that surplus of capital relative to valorization opportunity accumulation. And then I will conclude by some politics. So what is this logic of bubble in too late capitalism, and making a few comments in connection to the techno-federal hypothesis. So what is the rationale of that bubble? So first, maybe a definition of AI. A definition of AI. This is from, on the right, from an economic paper recently published. So Gen AI systems produce contextually appropriate artifacts. Okay, so they produce something that is relevant contextually. It's based on open-ended stochastic processes that grows from patterns in data sets. So that's processing data, analyzing patterns, and reproducing them in a meaningful way. And those artifacts are a variety of things. Of course, it's text, but it's not only text. It can be video, it can be computer code, music, whatever, chemical structure, etc., and so on and so forth. And the process of generating that is through the combination of hardware, software, and distribution of the services. So you have those very powerful chips produced by NVIDIA and others that are used to train some models. Those models then are mobilized through specific queries on the cloud of main data monopolists, so Amazon, Google, and so on and so forth. And then you have some specific application that allow to communicate with those models that are distributed by main platforms and that are going to AI, Gen AI users, final users. So that's what we are talking about. So for businesses, the argument is the following one. There is a compulsion to adopt those models. We find this time again this Eman Taneja that is making the argument. So AI is a transformative force, and the value really accrues to companies that have already existing consumer and data. So I think this is the first argument. The key way to valorize AI is to sell AI products to companies that have already existing businesses. So it's a way to change the way existing companies are operating. It's not a properly new line of final consumption. It's most of all something that is used for existing company. Those can actually benefit from AI, and they have to, because if they don't, they will be eliminated. Organizations that don't will be left behind. So there is a compulsion to adopt AI. That's the business view. And I think it's, of course, connected to Marxist theory in the sense that there is competition, and competition is linked to technical change, and one of the main driver of competition-driven technological change is to produce as cheaply as possible, and as Luxembourg said, the main way to do that is using saving as much as possible in terms of human labor. So that's labor-saving technological change that is the kind of competition that we have in capitalism that we are encountering now. So to what extent do we have labor-saving technological change? What the literature says is that we can find cases where we have some forms of productivity increase in the sense of labor savings, in particular in terms of writing, customer services, some forms of coding, computer coding. And so in all those sectors, we have specific cases that show that there is something like labor-saving technological change. And Herman Taneja explained to us that the first move to do is to replace by AI work that is currently done in the periphery. And I think that's also something very important because the first shock concerning employment will probably be felt in the periphery where a lot of things, services have been outsourced in the past. So yes, we have some forms of labor-saving technology that is taking place. And the argument is that we can build a mindset of abundance if it's cheap enough. So the same guy is also an investor in that company, and in that company they are selling intelligent AI nurse that are calling the patient, and they are already deploying this kind of solution, and of course it's much cheaper than paying proper people, and they say that, okay, if it's good enough and if it's alleviates the workforce, we can have a mindset of abundance because an AI can speak for hours with somebody on the phone that needs to have a conversation about his health. And you can have listen to those conversations. They say that, I don't know to what extent it is true or not, that there are real conversations between patients and AI, and it feels something. Okay, what economists are saying about this impact of AI in terms of automation and the impact that it could have. This is from the last early January meeting of the American Economic Association, and two papers show that there is probably some benefits in terms of productivities, but they are not straightforward and not huge. The first argument is that there are a lot of costs to deploy AI first, and so at first it could be more costly than before, so you have a kind of G-curve in the sense that you have cost at the beginning, so productivity is decreasing, but once you have reorganized your business process, you will get some benefits in terms of productivity. And the broader argument is that probably there will be some productivity boost, but that will take time, that this is uncertain, and it depends on the ability to valorize the technology. The main conversation here is the following one. The idea is that it's more than light bubble. It's more than one-shot labor saving. You know, light bubble, it was of course something that saved a lot of works, but once we have changed all the light bubbles, light everywhere, the benefits were already done. Here you have a form of general purpose technology. This is what economists think. like the dynamo, which means that productivity growth will last for a long time. It could be deployed, AI could be deployed in many areas. There will be new branches of business that will be deployed, and so we can have some boost in that dimension. And maybe it's even more than that. Maybe it's an invention of method of inventions. So there is more doubt on that, but they say if it's like the Microsoft, it will, the microscope, sorry, it will yield a sustained increase in productivity growth for a long time. So in that case, you will have a very important lowering of the cost of research and development, which will foster productivity and that will nurture long-time growth. So this is a kind of reasonable case, I would say. But there is also a case that says that something even more important is taking place. So here, it's more than Schumpeter. And Schumpeter explained that competition is not only about lowering cost at the marginal level, but it's changing the landscape. And of course, it's building a decisive cost or quality advantage. And this is something that will shake business at their very core, in the sense that it will threaten their ability to survive or not. This is, of course, the argument surrounding part of the AI bubble in terms of the singularity hypothesis. Of course, it's not a serious science hypothesis. Every serious science dismissed this idea. And even Nordos, that is the author of the paper that I will use now, acknowledge that it's not near, so it's not highly likely, but still, it's capturing investor mindset. And since we are trying to explain what's taking place with this AI bubble, it's important to figure out what is the argument here. So we have this model of the singularity hypothesis, and that could also explain why we have such irrational investment in the AI. So here we have the accelerationist argument. We have the idea that we could have a rapid growth in the productivity of computing. So we had a discussion yesterday about the contradiction. Grégoire made the point about the contradiction in terms of warming linked to computing activity, but you had the Moore law, and people said that maybe you can go further. And the idea is that at some point we will cross some boundary, and when we cross that boundary, economic growth will rise very, very rapidly. And the hypothesis of Nordos is growth over 20% per year. So that's very rapid growth. At that point, human will become superfluous because their relative performance in comparison to AI agent will be negligible, and we will have a lot of automation of tasks. And of course, in that framework, there is the idea that there is no limiting resources. That improvement in material use and energy use and miniaturization can overcome physical limitations. So what is the model? The model is the following one. So it's basically information produced by information capital. And what we have is that we have information that is produced by information capital, and this information capital is itself produced by information. So this is the logic of a loop that allows this kind of exponential growth. And it's accelerating. That's what we can see here. So a key element in that model, and I will go back to that in one moment, is that the information capital takes a rising share of inputs, which means that the volume of capital that is used to fuel the growth is more important than the relative fall in terms of prices. So this is the idea that we have elasticity of substitution to labor that is over 1. And this is crucial because that changes the whole story. I will show you that in one moment. So the second idea is that labor is disappearing. Of course, on the model, that's the green line, you have a wage growth that is exponentially rapidly expanding. But the truth is that there is no workers anymore. Workers are eliminated and replaced by automation. And this is here that the hypothesis is key, because it's kind of anti-Keynes. Keynes made the contrary hypothesis, not the euthanasia of the laboring class, but the euthanasia of the rentier. If you have elasticity that is higher than 1, if you have labor that is benefiting more of automation than capital, in that case, that's the contrary. You have the share of income going to capital will fall to 0, and all the income will go to labor. So that's just technical, but that changes the complete story. Of course, that's not the story that the tech industry is saying, but it's interesting to know about that. And so that's the final point. Their point is that the share of capital is going to unity, so capital is taking all the income. and there is no more income for labor. And of course, the idea is that the incomes will be captured by those who are controlling the intelligent machine. So this is the rationale for those more excited part of the bubbles. They think that they will be the one that will get all the money thanks to this kind of logic. Okay, so as I told you, I of course, don't buy the last story, but even the first story are not that plausible. And right now, I will try to map out the kind of fault lines that we can see. So there are many fault lines, and I will just point to some remarkable aspects. So the first one will be financial tricks. And I will show that there is a lot of financial fragility building in. The second will be delusion concerning productivity. And productivity is not really here, and what's happening to labor is kind of not very nice. And I will also allude to the possibility of an AI shrinking. So the impossibility to just maintain the level of AI that we have right now. So financial trick. We have a lot of sophisticated engineering right now. And one example of sophisticated financial engineering is the Meta's plans to build Hyperion, which is a massive data center, 30 billion investment in Louisiana. And the strange thing is that it is not owned by Meta, but it's owned by Benet investors. And this is a joint venture with Meta and another private capital firm that is Blue Hole. But Blue Hole is not putting money to. The money is coming from external investors. And that doesn't really make sense, because this money raised by the private capital firms is much more costly to raise than if Meta was raising money by itself, than if Meta was taking debt by itself. Meta is ready to pay 1% more in terms of interest rate than if it was himself making the investment. And the only reason for that is that Meta is not that sure that he will be able to make some money. So he's trying to have an exit path. So I think that we have something like in a classical bubble, a little bit like 2008. We have a magical story. People are saying that it's very sophisticated and so on, but people that are really concerned by the money are taking a rather cautious way of investing. The second story is that we have a lot of circular deals, and there has been a lot of discussion about that. So that's the kind of thing that we can see in that example. So you have OpenAI that is making a deal with Oracle in the sense that they will buy for 300 billions of uses of calculation by Oracle. But Oracle itself is spending billions of dollars in buying chips by NVIDIA, and NVIDIA is investing heavily in OpenAI. So you know that what's going on is that basically NVIDIA is giving money to OpenAI to buy Oracle services that is itself buying chips from NVIDIA. This kind of circular deals are very, very common. And there are a huge number of those kind of circular deals between, on the one hand, what you have in green that has chips makers, AI services providers who are in red, and the big platforms that are providing cloud services like Oracle, but Microsoft, Google, and so on and so forth. So you have a lot of these kind of deals, and when everything is going smoothly, that's very, very good, because that's accelerating the development of the whole industry. But if something is going bad, if the revenue is not here at the end of the day, you have a kind of double down on the crisis logic. Why? Because the firm that has invested in another firms that it was expected to be its clients will not buy anymore its product if the money is not here, and its investment will also lose value if that firm is exposed to diminishing businesses. So you have a lot of vulnerability in that sense. And that vulnerability is, of course, very concerning if you know that profits are not really here in terms of AI services. And that's very hard to know because it's kind of complicated to understand what's going on, but you have this great graph that has been made by FT Alphaville a kind of couple of months ago that show what we can think about OpenAI. What you have in light blue for OpenAI, it's the income that they are calculating is made by OpenAI. And what you have, the dot in dark blue, it's the cost of paying for computing power to use OpenAI services on cloud platforms. So they are basically paying twice their income just to run their services on platforms. So they're making huge losses, huge losses. And the funny thing is that, in fact, they are giving part of their income to Microsoft, and they are paying also a lot to Microsoft because most of their cloud services are to Microsoft. So you can see that here there is something that is probably not sustainable in terms of income generated. Which brings me to my second, which brings me to my second point concerning AI delusion. We have some adoption, but the adoption is highly subsidized. Why are we using AI? It's because it's free. Most of people are using AI for free. In terms of individual users, it's between 3 and 5% of people that are paying only. So most of the use is made for free. Even in businesses, a lot of business employees are using AI for free, not necessarily using the services bought by the corporation. And so the main place to make money is to look at what's going on in corporation. However, what's taking place in corporation is not really optimistic concerning AI. And here we have something that is absolutely crucial. This is the same argument that has been made by Brett Christophers concerning clean energy production. There is some efficiency that we can observe. Automation can exist. We can do better job more cheaply, but it's not translated into profits for companies that are deploying that. So you have this kind of tension. And Deloitte, which is one of these kind of companies, explained that it's achieving strategic differentiation and lasting competitive edge is the real challenge. That means that if everybody is just improving its efficiency, there is no profits to be made by companies. And you can look at this graph that you have on the right. What you see in green is that all the indication of improvement in terms of operations thanks to AI. But when you look on the right, in terms of increasing revenue, you almost have only for 1 in 5 companies, you have an improving in terms of revenues. So people are using AI, but profits is not there. So the ability to sustain AI will be difficult. You have another study by MIT State of AI Businesses last year. They explained that 95% of organizations that deployed AI solutions are not seeing any kind of return. So it's hard to benefit from AI. Why it is the case? Part of that, I think it's related to labor. There is a problem with what is happening to labor in using AI. So this is one case concerning illustration. And they made some tests. And the result of the test, I think, is very interesting. So that's the red line and the blue line. In red, on the vertical axis, you have the quality of the product. And on the horizontal axis is the time of the work process. And what you see is that with AI, very rapidly, you have good enough products. And after that, it's very hard to improve. You have a kind of plateau. So you are working, but you are not really improving your product. So it's very frustrating. Without AI, you begin with much lower quality, but the more you are working, the more you are improving your product. And there is this kind of paradox that you have a positive effect on quality, but due to this lack of ability to sustain motivation, you have a kind of discouragement of labor. Another example, I think, which is also nice, it's concerning the work slopes and what it does to you and your colleagues. Teamwork. And in many businesses, people are seeing a surge of work slop, which means that just good enough job that has been made by AI that is sent you by email. And so you need to assess what to do with that job, to revise that. You are upset because you are not happy with your colleague that sent that to you. And that's what they show on the right. People that receive this kind of work from their colleagues are thinking that they are less creative, less capable, you cannot rely on them. So it's kind of eroding trust in teamwork and eroding the collective worker. You have also another example concerning what it changed in terms of precise task, the kind of things that workers are doing. And here I'm just relying on two recent studies. The study on the left is trying to look, it's by researchers from Microsoft, by the way, it's looking at the kind of connection between critical thinking and AI. And what is said that there is a shift in the effort. You are not making the same kind of effort when you are using AI. You are less dedicating effort to the task itself and more to monitoring the task, to stewardship. You are trying to monitor the quality of the AI output. That's where you are putting your concentration. And this is, of course, the kind of managerial mindset, that surveillance mindset. You are surveilling AI, but that's not the same kind of effort as creating something. There's also a risk of over-reliance of AI and de-skilling. And here there is another research recently published that shows that it's about students writing essays, and it shows that people that are used to work on LLM and that are moving to brain-only writing essay are focused on a narrow set of ideas. Their essays are not as good, so there is a low quality. But the interesting thing also is that people that are only relying on their brain have a higher satisfaction and higher level of brain activity. So it's kind of proof at the micro cognitive level that it's changed things meaningfully. Well, I'm not really sure about all of that. That's not my field of expertise. But as an economist, what I would like to say is that maybe we don't have an G-curve, but on the contrary, an inverted G-curve. Meaning by that, we could have a kind of epidemic of workforce demoralization. If there is no proper AI strategy to satisfy the workers, we will have a kind of fatigue. You could have some short-term productivity gains, but in the meantime, you can have a deterioration in labor quality due to boredom, demotivation, de-skilling. And I think that is the main contradiction of, in terms of AI, if you want. So the last fault lines that I would like to point out is the possibility of a shrinkage. And here we have a contradiction linked to the materiality of AI producing process, but also the ecological dimension. One of the key aspects is that many people made the comparison between the dot-com bubble and the AI bubble. And they say, you know, the dot-com bubble of the late 90s in the US, at the end of the day, there was a financial crash, but that was not such a drama because all the cables on the optic fiber were built, so that was used later on for digital services, so, you know, that's good. But chips are not the same as those fiber cables. And the main difference is that they have a very short lifespan. So we do not have the same kind of legacy with the chips that we had with the cables. Useful lifespan, it's highly discussed and it's complicated because you have various modes of using AI chips in the course of their lifespan. But for AI top AI processes, it's between 1 and 3 years that you can use your chips, and no more than that. And most of the investment is linked to chips. And in terms of data center, it's 2/3 of the expenses that is made is related to chips, which means that most of the investment that is made right now to deploy AI will be worn out in 3 years. So that's not long-term investment. That's investment that will decay very rapidly, will age very rapidly. Which means that we can have a shrinkage of AI services. Indeed, if there is not enough profit to sustain investment, and if you have a decline of investment that is more important than technological improvements in terms of chips or diminishing cost of chips, in that case, you will have less chips available to make AI inference processes. So this materiality of, this possibility of a shrinkage, I think is also something important to keep in mind. The last thing, I didn't develop it a lot, but of course it's the ecological limitation. We know that it's an unsustainable trend. We know that not that very precisely because there is no proper regulation to know the precise impact of AI in terms of water, electricity use, and so on and so forth. But we know that it's rising very rapidly, and that it's already very high. Something like electricity consumption is something like the consumption of the country of the size of the United Kingdom globally. So that's already very important. And the response of tech companies to that is to move to space, and it's some kinds of, I don't know, of course it's not immediately available, but they are telling that story. And this is from Google's project Suncatcher. Demand for AI compute and energy will continue to grow. And since it's it will be very difficult to get that energy on Earth, what we can do is to have solar panel that can be deployed in space, because it's 8 times more productive than that on Earth, and also it's easier to cool, as Gregor told me earlier. And so space may be the best place to scale AI for compute. So if you're not convinced by my talk, you have these nice things that show you that, of course, it's possible. Okay, so here we are with the fault lines. So I will try now to, not to conclude, but to make some final remarks regarding the politics of this overaccumulation in too late capitalism. So what I mean by too late capitalism, I'm building on Mendel, and we talked about Mendel yesterday, that was mentioned in the presentation in the morning, and today also in the morning, and I think that Mendel, of course, is one of the important thinkers today. And for what reason? It's because really we are playing with this idea that we are touching with the limits of the system. And the limits of the system, not because of something that will be a kind of final crisis, something like that, but because we are touching the point where the socialization of labor is so huge that the market process of exchange is not adequate to that. This is the main contradiction, and Mendel was 100% focused on that. This is the idea of late capitalism, and probably we are now at that moment. And I think that, of course, Matteo, you emphasize that a lot in your book concerning the history of AI. The idea of AI is exactly about that. It's encoding the forms of social cooperation. So we are exactly at that moment, and we need to think about that. So overaccumulation is not overaccumulation as always. It's overaccumulation at one moment we are at this level of socialization of labor. So what that means, I'm not completely sure yet. So that's the thing that we need to think now. But I will just make 4 takes on overaccumulation in that context. The first one is that labor is in danger. And I think that it's very important. That's maybe the most important thing. Corporate AI is an urgent threat over labor agency. In the sense that we are observing de-skilling, senselessness, immiseration, surveillance, so that's something that is very immediate. But that's not only, of course, something that is really worrying and threatening for labor immediately, but that's also a contradiction for capitalism itself. There is no capitalist growth without labor, so this is the idea of the reverse G curve that I was pointing out. If there is no increase in terms of productivity, there will not the AI story will not be able to pursue for a long time. But at the limits, that's also the point that was forcefully pointed out by Mendel, capitalism is incompatible with fully automated production. So we don't have a kind of accelerationist view that doesn't work at all. The second take is following on Brett Christopher's idea that the price is wrong. It's also true in terms of AI. There is so we have an investment surge in AI, but we do not have any kind of investment surge generally in the economy. The economy is not booming. The economy investment is the economy is declining. There is no productivity surge in general. So we do not have a kind of boom, general boom. We have an AI boom, but not a general boom of the economy. And this is not an impossibility. I don't think that we cannot have improved productivity using AI. But what I think is that it's a lack of planning, the kind of AI that we have in the US that is not providing that. And probably what is going on in China, I do not have worked enough on that, but it seems that it's a very different path on that because they are looking at applied AI with specific targets in terms of industrial productivity increase, which is a completely different logic, and it's related to planning capability, of course. So probably in the US, at least, we will have some forms of crisis down the road, probably a crisis that will be very focused on these AI ecosystems, and that could be very strong, of course. And the question, of course, is who will bear the cost of the crisis? And I'm not making the prognosis of a crash. Why? Because I think that the state is already to rescue AI companies. They will not let them down. And that this is the launch Genesis mission that has been launched by an executive order of Trump in November, as they are very aware of the fragility linked to the AI bubble. And they say that it's just too important to fail. And they are asking the Department of Energy to take charge of AI, and they say that it's the same thing as the Manhattan Project. So it cannot fail, and there will be all the money of the federal state to support that. But here again, I think it's not only a traditional rescue of capitalists, because in that process, they are also opening all federal research to data of federal research to digital companies that we can use for free those resources. And here we have a broader pattern. We have opening of federal labs to those companies. Before that, we have entering with the Doge into the administration. Genius is allowing some forms of cryptocurrency to deploy. So all of those elements are some forms of outsourcing sovereignties or demonopolization of key sovereign capabilities of the states and giving that to a tech company. And this is one of the connections with my techno-feudal hypothesis, this idea that we have a kind of fragmentation of sovereignty that is taking place piece by piece, and this access to the Department of Energy resources is one of that. Finally, what could be forms of progressive socialization? I will just give 3 ideas here. The first one is, of course, regulating AI. And you have a very nice editorial in Nature, maybe some of you read that in November, late December, by the way. And they say that, yes, of course, we need to submit generative AI to some form of regulations, the contrary of what is going on in the US right now. But you can also have just watermarks on AI-generated content in order to trace what's going on and to be able to acknowledge what is AI, what is not AI, and to kind of navigate that new constant. The second thing concerning labor, I think that this is one of the big battles, is to have some kind of safe space for workers concerning AI. So it depends on industry, it depends on space, but it needs to have some negotiation between worker representatives on specific industry to delineate to what extent you use AI, to what extent you do not. And this is one of the big things that need to be done to preserve human coordination of labor, not automating that. And the third thing, of course, is more forward-looking, and it's more connected to progressive view of model and the idea of planning. So planning with AI, of course, is one of, if you have some hopes, that's one of the things that could be done. Elaborating scenarios, in particular linked to the socio-ecological transformation, deliberating lifestyles. There is a lot of possibilities to be done, but we are very far from that, unfortunately, now. Thanks for your attention.